Hi, Vieira with StockMarketLive.tv. Well, today we are going to discuss emerging markets, and in particular the best stock picks in emerging markets. Some of them you find complementary in the blog of the company at StockMarketLive.tv. For example, the case of Alibaba, a company that we upgraded to strong buy at $58 an half. But there are many more, and I invite you to visit the website and in particular the blog, since everything that we do it in real time, and therefore you have the opportunity to make a considerable profit in the markets. Moreover, while everyone else is discussing how to avoid losses in the markets, and since I already told you this thousands of times, more than 97% of investors worldwide lose in fact money in the markets, everyone is preoccupied with how to avoid losses in the markets. Here we have investment methodology, and I'm not aware of customers or investors having losses in the markets. And for your reference, you visit the first page of the website and you read or you refer to my comments in there, in fact to the history that you have available for the past 27 years in the markets. So again, let me just start by saying this. Let others discuss how to lose money in the markets. Here at StockMarketLive.tv, my friends, we discuss how to make money in the markets, which is a completely different matter. So the crowd lose money in the markets, that is their concern, it is not our concern. We are in the top 1%, and therefore our concern or objective is to inform investors how to make money in the markets. And not only how to make money in the markets, we are talking about minimum triple-digit return on investment. I repeat, triple-digit return on investment regardless of the stock or market conditions, as I proved, for example, with the case of Twilio, an IPO. And Twilio, it is just a mere example. There are thousands of calls on the website of the company where you have access to the investment methodology, which was recorded live since day one, discussing also an IPO, the case of GoPro. And it is precisely this investment methodology that we use in every single case or every single situation. And again, I'm going to here elaborate, that is to say, to refer to a stock pick, a company or an investment plan, which I consider, and it is already very profitable, and I'm going to prove it because we make these calls in real time. We have live stock charts to share with our subscribers, and I'm going to elaborate, since this is an investment process, explain what you should expect going forward in this company in one of the emerging markets. Bear in mind there are several articles on the website of the company, since there are several countries involved, and for example there is a recent one with regards to Russia. So we have other one for India, we have other one for Europe, some European countries, we have for China several articles, and today I'm going to elaborate in one important investment plan. So if you wish to proceed, you have to be a subscriber, and before I start, let me address precisely this important definition of which is wrong in the industry, emerging markets, since countries, for example, as India, we included in emerging markets, there is no difference whatsoever in terms of risk investing in India, for example, comparing to a European market as Portugal. I would say that you can in fact incur in by far higher risk investing in a European country as Portugal, as a mere example, compared to India. So when people constrain or limit the number of countries included in this standard definition of Wall Street emerging countries, this definition is 100% wrong, which is not the case here, since we know very well which is the risk involved by investing in these countries. Nevertheless, for obvious reasons, we continue, and the US stock market, it has been since the very first day our main priority. So I'm going to discuss this opportunity, this investment plan, and you are going to perceive, to understand why you don't have any risk whatsoever, since this is a company that I've been discussing for a long period of time. basically since IPO. This is what we do here, to shape markets history since IPO, discussing when to invest, when to buy, when to sell, when to go short, and so on. And for those that they are looking for further instructions, price targets, range, and so on, I'm going to include in this, you can call it live stock forecast, you can call it whatever you want, quite frankly, or trading lesson, quite frankly, does not matter. What matters is that this is an investment process. We have been following this investment process. You are aware of these stocks. And my objective, it has been always to help you to obtain the maximum return on investment, all right? So, before I start, you can refer to the website, where you have here all these important icons. You can click on them, and these icons are very important. Why? Because they refer to the world's best live market calls across all financial instruments. This to say that you don't have any other individual or company in the world that can present or introduce to you precisely these calls across, Bitcoins or stocks or 27 years record or free stock picks or gold or oil, since most of them, they are focused in one financial instrument. And in fact, by being focused in one financial instrument, they limit themselves or constrained with regards to how to invest in the markets. And in the end, the truth is very simple, is that they don't have any track record or credibility, as we proved thousands of times. So having said that, I'm going to start with the stock pick. So going forward, it is for subscribers only, all right? And we are going to start by referring to this stock pick in one emerging country, and the stock pick that I'm going to refer to is the case of JDcom. So as you are aware, JDcom, I've been discussing here JDcom for a long period of time. You have access to several articles on JDcom, including livestock forecasts and earnings calls. Okay, so you have them on the website. I'm not going to repeat here. I'm just going to make some additional comments which I consider rather relevant. I'm going to use here this to zoom, all right? This stock, I bought it for the first time around $26, more or less. The stock rallied, all right, last year in 2015 to $35.20, and we downgraded JDcom to strong sell precisely that price. So how do you know this? You know this because I published a live stock forecast downgrading the stock, and I did it by publishing it on Vimeo. So it has been available on Vimeo since then, including for small investors, all right? And I said that JDcom was going to crash, and so the stock crashed, okay? So the stock crashed. For those that have been here with me since then, there is an investment process. I repeat, the stock crashed following our investment process. So you have it here, the stock crashed, and initially it crashed to around, you can see it here on the chart, to around $23. Then it bounced quite well, and we maintained a strong sell rating in JDcom, and the stock crashed all the way down to a point that you have here, basically by the end of July, all right? So here you have this live market call in here by the end of June, all right? So where, for the first time since my downgrade to strong sell, I announced that going forward, we quit the short side in JDcom at precisely $20, okay? So $20, as you can see here on the chart, notice that this is a livestock chart, $20, 1% of the short position closed. $20, it was not the bottom in JDcom, okay? So the stock traded, I think, to $19.40 or so. So what I said to investors is that you should close your position in JDcom. Since we upgrade JDcom, we consider that worst case scenario is very near to this price target, $20 on the downside. There is a price target on the downside, there is a price target on the upside. And those price targets, as I define in the trading course or the basic trading course, they give you a measure of the involved, let's say, risk or potential profit on the short side as well as then on the long side. And so we decided at this point, that is by the end of June in 2016, to upgrade the JDcom to buy or strong buy. Not to strong buy in the sense that the JDcom is going to, rally to $39 or $35 again. I quite frankly don't visualize that to happen, but important buying opportunity in emerging market, as I called it in fact in the case of Alibaba, or other stocks that you have it on the blog of the company, namely, for example, in China, Qiyu, that everyone quit, and I upgraded to strong buy after profiting from the crash. Bear in mind that the investment process is very similar in all these cases. So the first is to profit from the crash, and then to cover the short position, reverse into the long side after you eliminated completely the risk. Okay. So if you want to buy going forward, and we already have an investment position in JDcom, since that has been my opinion. If you want to buy an investment or to have shares of JDcom, you had to profit and to follow the guidelines. Okay, so you had to profit from the crash in JDcom precisely to eliminate the risk. All right. So you find this, I repeat, this principle included in basic training course, as well as in hundreds, if not thousands, of case studies that I already addressed and you have on the web. All right. So going forward, we have already a long position, investment position in JDcom. Meanwhile, the share price has been advancing in JDcom. We are very happy because the objective it has been always to maximize profits. Again, look at the live stock chart in JDcom. And the title of this live stock chart shared with subscribers is World Best Trader Live closes JDcom short after calling a crash. So the investment principle always the same. So we know when to quit the short side, and to quit it since there was several short positions in JDcom. For your information, we started announcing it once JDcom started trading to $22. So it was not to close entirely or 100% at $20. You had a range to close it, that is to say between $22 to $20, and then to start buying the stock. Okay. So going forward, what we are looking for in JDcom, since there is a long position in JDcom, it is to eventually, for the rest of the year 2016 or in the future, or whatever, does not matter, quite frankly, the timing, since we are not here for day trading, is that the stock can eventually go to $26 to $28, all right? And if that happens, my friends, you make a very large profit. Not only you had the profit by buying the stock and investing when I told you to buy $26 to $35.20, then the very large profit on the short side, that in fact it was my strategy or main strategy to invest for the collapse in JDcom all the way down to 20, and then to buy the stock to invest and eventually in the future to see again $26 to $28. Okay, so an intermediate price or an intermediate range. And by doing so, if that happens, my friends, or even if it does not happen, you can ask me what I do consider feasible, all right, or the probability. I think that eventually that can happen, quite frankly, in JDcom. But like I said, the objective, it has been always to maximize the return on investment, and to maximize the return on investment, it is not to bet that this company, for example, is going at this point down to single digits, all right? So I didn't say that I visualized that, because I didn't. I said to cover entirely the short positions at $20. If you don't want to buy JDcom, that's fine with me. You are not obliged to do so. You have a very large profit, and you can utilize it, in fact, in other opportunities in the markets. I'm just referring to JDcom. Why did I say to close at $20? Because I consider that the worst case scenario for the rest of 2016, it's precisely eventually this price, and so JDcom going forward, it is a buy or a strong buy. A strong buy, not in the sense that it will rally again to the $45, but a stock or a stock that, in my opinion, is likely to rally. And you have, like I said before, other opportunities in China, in my personal opinion, and in fact even better in terms of quality compared to JDcom. For example, the case of Alibaba. Okay, so you can have a position in Alibaba, long position, as well as you can have one in JDcom. All right. If you ask me in terms of priorities or definition of trading strategies or investment strategies, precisely that one. That is to say, you have to go through or according to the priorities, okay? So obviously, again, I repeat, our objective or number one priority, for example, in China, I consider that Alibaba is a by far better investment, or at least less risk compared to JDcom, which is, or it has been always more speculative. Having said this, does not mean that in terms of percentage, Alibaba has to rally more than JDcom, okay? Sometimes these small companies, they have weird behaviors, okay? But nevertheless, or speculative stocks in other words. But nevertheless, what I'm saying, or what I've just said, has to be clear or explicit. If you are looking for less risky, that is to say a stock less volatile, my opinion is Alibaba is better, all right? The second, there are other stocks in China, and there are in fact better stocks than JDcom, but JDcom, it is again other opportunity that you have in China, and we have a buy rating and long position. So if you want to invest in JDcom, we are looking eventually for a target price range in the region $28 to $30, right? I wish you good luck going forward, and I leave you here with my recent call in JDcom, that is to say to close entirely the short position at $20, and congratulations obviously to all those that they followed my personal guidance in the markets by selling JDcom at $35.20, reversing to the short side and betting that the shares they were going to collapse, and I told you that I will inform you when I would close the short position. So you didn't have to day trade or whatever, I always said this, my friends, you are not going to give commissions to your broker or to the banks, on the opposite. Bear in mind also that Wall Street was wrong or completely wrong about this stock, since they were bullish at the top, including hedge fund managers, for example the case of Jin Shannon, okay, that he invested in JDcom, saying that JDcom was for him a very good opportunity in the markets in China, and he was proven wrong, okay? So we proved, and I told you that this was going to be the case. So today, listen to what I'm saying, today you have an investment position in JDcom already, most of you, those that they are the institutional customers, those that they have access to our most complete service, you have already today, but also the small investors, because small investors, you have these charts, or partially what you are seeing here, in the service Live Markets Premium, all right? So Live Markets Premium, you had plenty of information with regards to JDcom, all right? So I prepared you for this, all right? So others, they don't, okay? That is all out there, but that is a different matter. So I don't have any further comments, and I wish you good luck investing in JDcom. Thank you, bye.